Hello and welcome to your market update. This week, we're diving into a story that didn't just move the needle, it completely reset the whole board and really shook investor confidence to its core. Yeah, forget all the usual market chatter for a minute. We're about to unpack a story that absolutely blindsided everyone. A key economic report got a shocking revision that threw everything into question and sent some serious shockwaves from Wall Street all the way to the crypto markets. So, to make sense of all this chaos, first, we'll look at what exactly derailed the market. Then, we're going to trace the ripple effects across the US indices, gold, and crypto. And finally, we'll piece together what the new playbook looks like for navigating this kind of uncertainty. Let's get right into it. Our story really kicks off with a market that was already, on a knife's edge, just trying to guess what the Fed was going to do next. So just days before all this went down, you had Fed Chair Powell out there pretty much telling everyone that the economy was looking strong and a rate cut in September was, far from a sure thing. He was basically telling the market to cool its jets. That was the official story. And then, the bombshell. The non-farm payrolls report came out, and it wasn't just that the new number was weak. No, the real shocker was this massive retroactive revision. The data from May and June, which everyone was celebrating as super strong, was suddenly revised to show the worst job growth since the pandemic started. I mean, a complete 180. The fallout was, it was immediate. The head of the statistics agency was fired, and right away, you started hearing these allegations of data manipulation flying around. But honestly, beyond all the political drama, investors were left with a much bigger problem. The market's fundamental trust in one of its most important data points was just shattered. And in the face of that kind of chaos, the market doesn't wait for an explanation. It jumped to two huge conclusions. First, that none of the other positive data mattered anymore. This jobs report meant a recession was on its way. And second, that whatever tough talk Fed Chair Powell had been doing, it was now totally irrelevant. His hand would be forced. A September rate cut was suddenly back on the table. So with that new reality setting in fast, how did the major U.S. indices handle it? Let's take a look at the key levels that traders are now watching like a hawk. For the Dow, you saw an immediate, sharp wave of selling. And now all eyes are on this one critical number, 43,262. You got to think of this as more than just a price. It's a battleground. It's the line in the sand where buyers are supposed to show up and defend. Whether they can hold it is going to tell us a whole lot about the market's mood in the coming days. It's really the same story for the broader market, which we see in the S&P 500. The index got knocked down hard to this crucial level, 6,200. This is pretty much the market's moment of truth. If it holds firm here, that could be the first sign of a bottom. But if it breaks below this with any real force, that could open the door to a much, much deeper slide. Now, for the tech-heavy Nasdaq, there are two key zones on the map. The first line of defense is right around 22,654. If that doesn't hold, the next major support area traders are watching is down at 22,374. These are basically the trenches where the battle between the bulls and the bears is going to be fought next week. But the stock market was only part of the story. This sudden shift, expecting rate cuts and a weak economy, it sent investors scrambling into other places. So where did they look for an opportunity in all this mess? Gold rallied like crazy on the news, but it ran right into a major historical roadblock at $3,364 an ounce. This level has been a ceiling for gold again and again, so it creates a really clear decision point for traders. If it can decisively break above this and stay there, that could signal a powerful new uptrend. But if it gets rejected here again, we could see a quick trip back down to support around $3,250. Silver's story is a little different, actually. It had already taken a sharp dive before the snooze hit, so for some investors, that makes its current price, right around $37, look pretty attractive. The thinking here is that the first drop was overdone, and with a potential target of $43, this area could be a really compelling place to buy. The sell-off also slammed the crypto space, pushing the big names down to some really important technical levels.
Bitcoin, for example, is now sitting right on major support around $11,300, and it's actually showing some bullish signs. Ethereum looks to be in a similar bottoming area. And even Ripple, which fell harder than the others, has landed on a previous support zone. So for all three, the strategy that seems to be emerging is cautious, gradual buying at these beat-up prices.
So let's pull all this together. What does this actually mean for us, the average investor? The entire game has changed, literally in the blink of an eye.
I mean, the whiplash is just undeniable. Before this whole data revision thing, the market was bracing for a strong economy and no rate cuts. After, the narrative has completely flipped on its head. The market is now pricing in a September rate cut to fight off what it now sees as a very real threat of recession. We are operating under a completely new set of rules now. And that leaves us with the big, massive, lingering question, doesn't it? Was this just a colossal, embarrassing mistake from one of the world's most advanced economies? Or was there something more going on here? A deliberate manipulation to influence events, like some people are alleging? The answer to that question is going to have huge implications, not just for the data's credibility, but for the entire direction of the market from here on out. We'll definitely be watching to see how that question gets answered in the weeks ahead. Thanks for joining us for this explainer. We really appreciate your support, and we'll catch you on the next one.